anything can change. But right now, we have to face the fact that the macro pattern, the bigger pattern, is still bearish on Bitcoin. And one of the things, I mean, you look at psychology, and you don't have the common, and Blake knows this from the dot-coms, you don't have the despair yet. People think, they're like, oh, this Bitcoin market sucks, it stinks, but they're not like, oh my goodness, Bitcoin's going away or it's failing or anything like that. And I think we have to get there before you see a significant bottom. Yeah, I think it does have an impact. At least in the last couple of weeks, it's been kind of minimal because Bitcoin's gone really to sleep, which, by the way, is very reminiscent of, there's a 2008 period where it was the quietest period, and then we dumped out about 50% from there. And I am concerned that that could be in the cards at some point in Bitcoin. But I think the data, you have to pay attention, because the data influences the Fed, which then controls the dollar and yields. And we know that, I mean, if you watch the S&P, if the dollar upticks, the S&P downticks, and vice versa. So it's all connected, and it all trades back to Bitcoin, and Bitcoin generally will do the same as the S&P or the NASDAQ. Yeah, so I agree with Blake in that it comes down to leverage. And if you don't use leverage, then it's the same thing when you go all in of your full account in one coin, right? The common thing is, I mean, I think a lot of newer investors, they look at the markets or Bitcoin as a get rich quick. And I think things like Dogecoin and SHIB and a few of these others have weirdly done a disservice to investors, where they hear about these people that made $100 million in a very short amount of time. And it's like, oh, well, I want to do that too. And the answer is that, 99.999% of people won't succeed. It's just like winning the lottery. I mean, we play it because it's, you dream, but in reality, most of us are not going to win it. And so you have to just go back to the basics. And in my career, I never made as much money and grew my wealth as quickly as when I actually started doing smaller position sizes. Because yeah, sure, you'd hit a home run here and there, and then you'd lose all your money. And then it's like, okay, well, now I'm below even where I started out before those home runs. And that just can't, that math doesn't work out when, you make 100%, but then lose almost 100%. So I think it's small diversification positions and just kind of singles and doubles. I always like to say, in the baseball terminology of like home run hitters, what do? They're great hitters and they're glorified, but they strike out a lot. Well, in trading, you don't want to strike out. You want to, occasionally you're going to strike out naturally, but singles and doubles get you to the Hall of Fame. And I think that's where it's. Yeah, so I think with Bitcoin, the charts right now, we have a nice little wedge pattern. In fact, I'll bring up my charts here and we can just take a quick look. But basically, and bear with me while I pop them up, but yeah, no basically problem. I'm in a position where the Bitcoin daily chart is in this very tight wedge pattern, and it's basically going to be forced outside of the wedge pattern probably within the next week, right? So we can put a trend line right here, and you can see you're basically hammering on it. And then you can even connect from the June low right up underneath. And it can only go so far before it's going to be forced out of this wedge. So the question is, well, which way does it break? Part of me is leaning towards, at least per what I'm seeing and calculating, is that we could be due for a short-term kind of squeeze, maybe as high as 22.5 to 25,000. But it doesn't change the fact that we're still inside of a bigger macro pattern. And so the macro pattern, for instance, would be what we refer to as a bear flag, right? So if we put a line here and we drag up that, this is definitely from this move down, or you could use any of these moves down. This is longer term consolidation, which is bearish. So even if we get a short-term squeeze, let's say to 25, it's still within this range. And therefore, I would say by year end, I'd be very surprised if we haven't already taken out the June lows and headed lows. It is exactly what it is. And I think you're right. I mean, there's a good trader always recognizes that their thesis can fail. And again, probabilities are what charts are, and they're giving you probabilities. So anything can change. But right now, we have to face the fact that the macro pattern, the bigger pattern, is still bearish on Bitcoin. And one of the things, I mean, you look at psychology, and you don't have the common, and Blake knows this from the dot-coms, you don't have the despair yet. People think, they're like, oh, this Bitcoin market sucks, it stinks, but they're not like, oh my goodness, Bitcoin's going away or it's failing or anything like that. And I think we have to get there before you see a significant bottom. You saw it in 2009 with stocks. Think about the bank stocks. And I still remember vividly the fear, even myself, how crazy Lehman was, and then seeing Bank of America trading at like $1 a share or whatever it was. I mean, that was scary stuff. And Bitcoin hasn't gotten there. I do. I do. Generally, every bear market, you do need to see that. Otherwise, I think it's not a true trust. I don't trust it enough. And I also think we have to recognize that with Bitcoin, this is the first bear market that the Fed's not printing money. So it brings up the question of, is this going to be a longer bear market because of that? You know, in the past ones, we've always had QE and QE of sorts going on that's brought Bitcoin up out of its bear market. And here we don't have that. So unless the Fed goes back to it, I do wonder if it can be a worse bear market than we've experienced in the past. Yeah, so I'm in the camp that we still have another leg down in equities. I agree. There's going to be awesome bounces. I mean, bear market bounces are notoriously, they call them rip your face off rallies, right? Because they're just so amazingly violent in terms of the moves up. But everything I have on my charts, and I'm mostly, I mean, that's really what I trade mostly is equities, just because there's more opportunities there. It's telling me we still have downside to go, and I think the market, I have the forecast for the macro divided into two sections. So right now we're in the down section waiting for the Fed pivot. The Fed pivot will come. It'll create some sort of rally, like Blake's saying, the dollar should pull back. It's getting closer because I think, honestly, you look at the dollar yen, we know what happened to the British pound and how the Bank of England had to step in. More of these central banks are going to have to step in. At some point, the Fed's going to have to back off a little bit, otherwise risk a global depression. But I think my big concern for the next leg lower, which I do fear could be a hugely more violent move down, after we get that kind of pivot rally, you have a scenario where the Fed is going to, the investors are going to say, okay, we are now in a recession. I think we all agree we're probably headed there. The question is how bad. And investors will look at the economy and say, okay, Federal Reserve, can you please start printing money again? And the Fed's going to look back and say, you know what? We really would like to, but inflation is still elevated above 2%. It's 4%, let's say. And that's going to be a wake-up call, right? The market is not, it's like a kid who's used to getting their way with their parents, and then all of a sudden the parent puts their foot down, and the kid's like, oh my God, what just happened, you know? And so I think that's where you get that next violent sell-off where the economy goes into a recession, and we say, how long is this recession going to last? Because we've never come, the only time we come out of recessions in the last, 15 years is when the Fed prints us out, and the Fed's not willing to do that at this point. So I think that's going to be the big wake-up call maybe in 2023, where we actually could see under 3,000 on the S&P.
Yeah.
And I think remember that there's a huge amount of new investors that came in during COVID and after COVID because they were at home. They discovered the markets, they discovered crypto. They never
discovered Robinhood.
Yeah, Robinhood, right, exactly. And they've never experienced more than like a 2-month dip before we were hitting new all-time highs. And so there's kind of this reckoning that almost has to come in where like, all right, now the Fed's not here to save us, back to normal bear markets that can last a few years.
At all or no?
Yeah, I think it makes a lot of sense. And I think the best example right now is what's going on with other currencies, right? When you have the US dollar as the reserve core and the Fed, what the Fed is doing is crushing these potentially other economies through their currency. It's a great example of why we need a more multi-layered or multiple reserve currencies out there. So I think that makes a lot of sense. I also think that it's recognizing that China is going to be the biggest superpower out there in the future in the next decade. And they're probably starting to position themselves